Hello again, everyone, and welcome out to your Currency Room. This is Ankit, as always, back with the Currency Room and taking a look at this week's price action and talk about our upcoming week ahead as we head into this holiday shortened week due to the Memorial Day weekend. Looking at this week's price action, we have an equity market that remains bullish. We did see equity market pull back for a day or two, and with the stronger earnings, we are just seeing equities being resilient, especially as we head into this debt ceiling deadline of June 1st. Again, we don't have any sort of resolution as of yet, but seems like the market seems to be not caring it right now. Where we are seeing more of that price action is in the bond market and the US dollars. You can see that the dollar did break out this week, and that was, again, the biggest gain since January 2023. So we haven't seen this for the past 4 or 5 months. The yields continue to climb higher. Again, yields broke out last week and they just kept running. So is this something happening due to the debt ceiling? It could be. But one of the things to pay attention to is the rate expectation. Just 3 weeks ago, we were sitting at no rate hike expectation to almost rate cutting in the later part of this year. We have shifted from that point of view now to 60% chance of rate hike in the upcoming meeting. So again, big sort of change that the dollar and the bond market is pricing into. So something to keep a close eye on. We also have the gold that did pull back, and gold has been sort of struggling for the past couple of weeks, and we are seeing nice little pullback into this week. Outside of that, crypto markets mostly range bound. Not a whole lot of price action, sporadic moves here and there, but that's just what the nature of range bound markets are. So let's not pay too much attention to cryptos and see what's really moving. So this week we had few important data sets. Again, looking at the manufacturing PMI numbers, you can see that they were kind of mixed. And as always, we are seeing the manufacturing contracting and servicing being on the upside. So that's really what we are seeing. And again, very mixed numbers out of the Eurozone as well. The biggest bombshell this week, and it was really a bombshell because the RBNZ was expected to raise rates by 25 basis points, and that was really expected, and that's really what came out. The expectation, I guess, or the statement was a little bit more dovish, and we saw the Kiwi took a big sort of move to the downside. So something to pay attention to in the coming week ahead. But that was the biggest mover for the week. Outside of that, anything else didn't really move the market. CPI out of the UK didn't really move the market. We had the preliminary GDP yesterday, didn't really move the markets, and we had the PCE price index today, 0.4 versus 0.3, and that didn't really move the market. So again, the biggest highlight was the Kiwi dollar this week. So let's take a look at the weekly performance and see which one stood out. And as you take a look at the S&P, we are up merely 0.39%. But again, this is where take a look at the chart. We did pull back first 2 days right here. We did pull back, and then last couple of days has been a monster to the upside. And if we take a look at the Nasdaq chart, I mean that chart is just bullish. So we are seeing a lot of bullishness in the broader markets, but again, these are also driven by a handful of stocks, which is where it's a very narrow markets to kind of deal with. Now, looking at the world stock index VT down 0.41%, so this was definitely more strength in the US front. Crypto markets down 1.58%. Gold again had a notable move down to 1.64%, and oil was up 1.13%. So very important to keep an eye on what's moving and pay attention to those sort of movements, and then kind of go from there. And looking at the equity markets, this just seems like a bull pullback to me. I mean, we talked about how we could possibly fall back into the range. So everything looked good over here. We were falling back of the range, and it seems like the market was about to go sideways. And here we are, a massive move to the upside, and we are looking at a further gains going to next week. So we still have the debt ceiling ahead. But again, right now, if you look at the price action, it doesn't seem like market care for it. And once that comes through, that should be bullish for the markets. So I think the market probably stay on the upper end of this coming week. Now, looking at the percentage change, I mean, massive percentage move. This was a great week in currency trading. Dollar up 1.76%, and Kiwi was down 2.58%. That means that the Kiwi dollar was the biggest mover this week with more than 4% of a movement. Again, that's a huge move in the currency world, and that's really where the biggest move was. Outside of that, you can see this was not a split market. I mean, we are seeing the dollar, the Swiss franc, euro, pound, CAD, they all relatively did okay. Now, the Aussie and the Kiwi are the one that suffered the most. And remember, Kiwi was the one that has been holding up really well as well. So maybe we're just seeing a sell-off or taking the profits on the news as we have RBNZ that's looking to kind of keep rates on hold. The Japanese yen down again, minus 0.44%. So those are the areas that we are seeing weakness in, but I mean, not a whole lot in the European front. And if you compare, I mean, euro dollar did pull back, but overall in an equally weighted baskets, euro wasn't the weakest one, or the pound was the weakest one, because the Kiwi really is the one that took the wind out of a lot of these other currencies. So that's really where the movement was. Canadian dollar also looking good here, breaking out ahead along with the US dollar. So there still seems to be that correlation there, not to the point, but they are following the similar direction. Looking at the crypto world, you can see the crypto world mixed sort of numbers, and Litecoin, which was again the best performer just a week ago, is now the worst performer. So take my guess to it. It's more like a flip of a coin on where the crypto outlook is. So let's take a look at quick market analysis and see where we stand for the upcoming week ahead. So I'm still sitting at a +1 to a +2. I think we still have this debt ceiling that we need to get past. And we could definitely get sort of surprised as we run into this ceiling in the last minute. I mean, we expect that to kind of go into the last minute, and maybe the market will take a little bit more on the negative side. But overall, once that get through, I think that's a clear signal for the markets. And again, same thing with the World Stock Index. They're kind of in the range here, which means that the U.S. markets are definitely better in terms of the technical setup. And now here we are with the crypto world. Again, this is a chart that is just not going anywhere. Sideways play. So this is where you got to realize that the big rush is out. I mean, we had that big rush back in April. Now we just fallen back, and this thing is not going anywhere. So outlook overall, I think is a +1 to a +2. I would again switch to a +2 once I can get past that big the debt ceiling. But for now, the markets are sitting at massive gains already, so we might just go sideways or try to push higher. But I think we probably see that in the better price action the later half of next week. Now, looking at the calendar here, and calendar-wise, next week we have some important data, especially on a Friday. We're starting off the new week, the first week of the month, and we started off with the U.S. employment report. But outside of that, is there anything else that we can really pay attention to with the preliminary GDP, the JOLTS job openings? I think that one is important. The ADP numbers, and we have the ISM manufacturing PMI. So starting next Wednesday is really when I will start looking at the US dollar place, because we are definitely noticing a lot of movements coming off from these economic events. So the US dollar goes in sort of a watch starting Wednesday. And again, we'll have to see how this equity markets react to those news as well. And looking at this week's outlook, again, markets likely to extend gains. We still have this confirmed breakout. We retested that support and we are back above it. So right now, we have to be bullish. That's what the chart says. Looking at the economic reports, again, we have starting Tuesday, we had the Aussie CPI, but most importantly, starting Wednesday till Friday, those data will be a lot more important for the US dollar and for the equity markets as well. So let's do a quick currency analysis and take a look at the charts and see where the trend and the velocity score is. And if you take a look at the trend and velocity scores, we are not really seeing good numbers out of this crypto world. The Bitcoin is still sitting at -2, but in the shorter term velocity is at a +1. So again, we are not seeing a match of that. And that's really where we are in the crypto side. We didn't get any sort of buy signal here. Velocity is sort of picking short term, but if you look at the trend score, they are really unchanged. They still remain weak to the downside. Now, let's talk about currency, because this is where we are seeing better technical setups. Now, take a look at this US dollar currency basket. I mean, this is where we were just last week. And this week was a massive week for the US dollar. You can see that 1, 2, 3, 4 has been a nice little push to the upside. And we are seeing velocity picking up as well. So we are sitting at +2 on the US dollar, and as well as the velocity score. It seems like that's likely to continue. The big question is that once this debt ceiling resolves, is that going to affect the US dollar? Well, I think what we really need to pay attention to is not just the debt ceiling, but also the expectation for further rate hikes. So I think when we start to get data from Wednesday till Friday, that would affect what the expectation is for further rate hikes. Right now, again, we're sitting at about 60%. If that continues to climb higher, we probably see the dollar stay strong. If that starts to pull back off the data, then we'll probably see some sort of pullback in the US dollar. Remember, right now, it's all about the expectation for further rate hikes, and that's what's really keeping some of the currencies elevated. And once that expectation diminishes or really go out of the window, just like how we saw with the RBNC this week, now that's really where we start to see profit taking take place. So that's really where the dollar is. But for now, it's just nothing but on the bullish side. Looking at the Japanese yen, again, this chart is just reminding me of last year. It's almost like a deja vu where this time of the year last year, this was just falling apart. And that's exactly what it's doing right now. -2 and a -2. And then again, dollar yen has been a nice little mover off of this decline in the yen, and that dollar being strengthened here. So overall, no real hope for the yen. I think this is just the way it is. If we start to see a sort of risk off move, I mean, especially if around this the debt ceiling drama, if anything kind of unfolds next week, we could see the yen sort of take a bit of a short-term jump. But every little pop is being sold, so you got to realize either I just stay short or I just wait for these pops to sell into. Outside of that, Swiss franc again, Swiss franc again back to its previous resistance here. So remember, Swiss franc has been kind of out of commission for the past couple of weeks, 2 to 3 weeks, and here we are back at the resistance. Can we break out higher? I think that's the question to kind of answer next week. So far, velocity is pretty strong. So right now, with the strong velocity hitting the resistance, we could potentially break out. But the big question is, would that happen later on next week or earlier next week? So I think we just have to kind of time that better and wait for confirmation, especially if we try to break out that level. And similar situation with the euro. Euro looks a lot weaker compared to the Swiss franc, but they're kind of following the same path. Past 3 days has been nicely to the upside, and the velocity score is picking up as well. And same thing goes with the British pound. I mean, this thing has been resilient here. Above the 20, above the 50, you can see any little pause that these currencies are taking, they are just buying opportunities. So far, it seems like that the pound wants to break out higher. Lastly, the Canadian dollar. I mean, look at this currency pair. This is also now breaking out as well. We have been in this wide sideways range in CAD for almost 6 months. 6 to 7 months. So you got to keep that in mind that we have been in this range for the longest time, and it seems like we are getting that confirmation where it is breaking out higher. Remember, just like the expectation for the US rate hike, we are also seeing a rate hike expectation building up from the Canada as well, because their inflation number was a little bit stronger than what they were looking for, and there's a lot of expectation that they might be raising rates. So something we have to kind of pay attention to. But for now, the score technically it's looking a little bit better. Now the real pain is really in the Aussie and the Kiwi. You can see that Aussie overall, as far as the trend goes, it hadn't really making a new low yet. This is the May low that's still sitting there. We haven't really made the new low yet, but overall velocity score has been quite weak. So the biggest move really was this Kiwi. And you can see that we almost were hitting that resistance here. So just last week, Kiwi was a best currency and it looks like it wanted to break out. And here we are, broken lower. So this is why we always talk about both case scenarios and looking for confirmation around these key levels, because that's where that's really where these turns are taking place. And you can see that there hasn't really been much bounce in velocity since then. So that seems to be the case for this week. as we go into next week. We'll just have to see if there's a continuation to it. But after a big fall like this, we are likely to see some sort of a bear rally or some sort of a basing pattern before we can take another leg lower. But after a big move like this, I think next week we might have to, look at elsewhere and not so much in the Kiwi. I think we need to see Kiwi take a break a little bit here in the short term. So as far as the trend score goes, again, pretty split. I mean, dollar, Swiss franc, pound, and CAD. So really, you're left with only a couple of options to short against: the yen or the Kiwi. And the second best option would be then the Aussie, which we know we are not really seeing a breakdown in the Aussie, but it is following that pattern. So that's really where we are. I mean, we are not seeing a split view where half of the currencies are -2.5 or +2. We're seeing most of them are +2, and there's only two currencies at -2. So again, yen has been the big play so far, and the Kiwi has been the big play. Whatever happen next week, I think then that play will shift into some other currency. So pay attention to a lot of these pairings and see which one is relatively strong and which one is relatively weak. This is very crucial right now to pair the strength versus weakness and look at what's moving rather than what you think you should move or maybe some pattern that you like. You're stuck in that chart, but something else is moving a lot faster. So pay attention to that one. This is where velocity score comes in, and you can see that for velocity score, I mean, pretty much it's matching with the trend score. I mean, we are seeing pretty much a one-way move since Tuesday, Wednesday, since we had that RBNZ rate statement. We're pretty much one way. So I haven't really seen a whole lot of shock in between. I mean, that's where we have to kind of see next week what it brings to us, because what we see is lately it's a lot of one-sided trades, one-sided moves. And when we shift to next week, that could change as well. So the focus shift, and you have to shift with that as well. So let's take a look at possible trades ahead. Talk about what looks the best here and where we need to pay attention to. So before we start, again, just wanted to show you the expectation for the Fed Fund futures. I mean, we are sitting at 66% on the rate hike, and just 3 weeks ago, we were sitting at 0% chance or a very small chance for a rate hike. So this is where the dollar is really catching up and doing the pricing in. So let's talk about dollar here. So dollar had a big move, and I want to highlight two charts here. This is a dollar currency basket, and you can see that on a currency basket, we are at the levels that we were back in February. That's where we are right there. Now, if you take a look at DXY, and DXY, which is highly weighted with the euro and the yen, you can see that this thing is also moving higher. It's not breaking out as what we saw with the currency basket, but it's kind of following the same direction. It's above the 20, above the 50. So this is where the chart is very bullish. You cannot deny that this chart is, just a one-way trade. I mean, take a look at 4-hour chart here. Every pullback is being bought out. So right now, I think the path of least resistance on the dollar is to the upside. Now, taking a look at other currencies, and I want to take a look at Kiwi dollar, which again was the biggest mover this week. So what's the outlook here for this? I mean, you can see that we have broken a very important level of support. And we have been in the support for last 4 months. Since February, March, April, May, we have tested this level. So we've broken this level. So every time I see a breakout level like this, the first thing I would like to look for is sort of a retest. Either a base or it has a little bear rally, it retests its prior support, which is then become the resistance, and then we sort of roll over from here. We need a little bit of a pause to get into that further continuation. But if you take a look at the premium, this is really where the premium is sitting. We had a massive move last year in Kiwi. You can see that move was monster move. Almost a 16% gain in just a currency basket. I mean, that's a massive gain. So since then, now we have actually given up quite a bit of that, but we're still sitting nicely above 10%. So that's a 6% loss, actually down to 8 or 9%. So we almost given up about half of that move. So after that move here, we need to see a further continuation to the downside. Especially if the Kiwi stays weak and if the dollar stays strong. A lot of setups actually look pretty good when you take a look at the dollar crosses. Same thing goes with the euro dollar daily chart. Even though it didn't fall apart the way the Kiwi did, if you look at it, like the prices are very slowly moving lower. So no sort of reversal sign whatsoever. This is a 4 hour chart. You can see that we have, this is where when things are trending, the moving averages does a really good job. As you can see that the moving averages are acting as a nice little resistance here. So until we can really break out of it, I think we just need to continue selling those rallies. And a similar thing goes with other dollar crosses. Let's take a look at the Aussie dollar. And this was another one that I really liked this week. Just like the Kiwi dollar, Aussie dollar also broke lower as well. So I mean, right now, if you look at it from here on, we can go back to the October lows. That's really the next level of support here. But the big question is, how long would it take to get there, or do we have any sort of catalyst coming in? So for now, similar pattern. I would look for some sort of bear rally or a base to kind of short into. So those are the setups that we have. Outside of that, the Aussie Kiwi is the one I want to highlight. I mean, look at the massive move in the Aussie Kiwi here. The question is that is this where Aussie should sort of take a lead compared to the Swiss franc? That's really the big question here. And right now, you can see that so far this year, we have seen the Kiwi being actually more on the stronger side compared to the Aussie. So pay attention to this one. We are back at the resistance here, right here. We're running into the resistance. If we can break above that resistance at 108, it can head out of that range. And I think in that case, we'll probably continue favoring the Aussie over the Kiwi. If this will pause or maybe roll over again, then I think we just have to reevaluate. But right now, if you look at the price action, it's pretty much one way. We did base for quite a while here between 107 to 107.40, and then here we are at the end of this week. We are right at that resistance. So that's really where the movement is. But I think next week we can see this sort of a continuation or sort of a breakout pattern in some of these pairs as well. So outside of that, I mean, let's take a look at dollar CAD as well. This thing is right at the resistance at about that 136.50. So if this needs to break out, it needs to break out above that 136.60 area to retest that 138 area. But right now, CAD also looks strong compared to the dollar. So maybe that's not really the best pairing, but something to keep an eye on. So there's a whole lot that we can see. But after a big move like this week, we might have to wait for some sort of consolidation in order to re-enter those trades. So it's a holiday shortened week, which means that the equity markets will be closed on Monday. For currency traders, markets are open, but remember, there will be lack of liquidity in the markets. We see more activity when the U.S. and the broader markets are open. So that's something to pay attention to. I would personally not really look into trading on Monday, maybe Monday evening, but not much from a Sunday night to a Monday. I think that's really a quiet zone. So overall, markets remains bullish, but we just have to kind of get past that debt ceiling on that deadline is June 1st. And as always, make sure paying attention to velocity scores and following that relative strength and weakness. Have a great weekend ahead. Have a nice little, long weekend, and we'll get back into it in next week. Thanks, everyone. Take care.